Livewire's top-rated fund series. I'm your host, Ali Selby, and today I'm joined by Catherine Allfrey from WaveStone Capital. Thank you so much for joining me today.
You're welcome, Ali.
First up, I'd love to know what actually motivates you as an individual.
As an individual, wow, that's a big one. I would say I love to learn. That's the thing. So I love to come to work. I love to meet people. I get energy from interacting with people, and I always want to keep learning. So that's always been my philosophy in life.
Have there been any mentors that have been really pivotal in your career so far?
I've had a few actually. I had a loud American that I first worked for when I first went into stockbroking, and he was very patient and taught me a lot in terms of forensically looking through accounts. So I learned from him. And then also Greg Perry at Colonial First State, as well as Ian Harding there. They taught me a lot over the 6 or 7 years that I worked with them. About investing, about following the Fed, and always watch what is happening with monetary policy, but also the key about focusing on earnings drivers for companies, and also the fact that share prices will follow that earnings growth. So they would probably be the sort of three people that have really helped me.
Has there been any lessons that have stayed with you throughout your career?
Well, that one about follow the Fed, and that again was pivotal last year. As soon as the central banks are flooding liquidity into the market, that's obviously a clear signal to buy the market. Again, other lessons that I've learnt over the time have been, be patient, be well diversified. With management teams too, reading people I think has become increasingly important, and understanding how people work, and the difference between a fraudster and someone who you can trust. I think over time that the experience has taught me that.
Is there one investment theme or topic that you and the team are spending the most time debating right now?
In terms of investment, we're bottom-up investors, so we don't invest thematically. But one thing that we're trying to look at long-term at the moment, I'm going to leave aside inflation because I imagine a lot of fund managers are talking about that. I'm going to leave that aside, and I'm going to say we're actually grappling with China, right? China's caused a lot of pain on the trade side, particularly to the Australian economy, but it also is the land of opportunity, right? And when we look at China, we look at the fact that there's a massive ageing demographic. It's predicted, the census has just come out there, and there's supposed to be 30% of the population is going to be over the age of 60 within a few years, right? So that's just a massive market. It's very similar to, Western democracies. We've got this ageing population. So is there, for our healthcare companies, is there an opportunity in China? That's the sort of things we're trying to grapple with, because clearly we've seen a lot of pain for Treasury Wine, we've seen pain for A2 milk in the last 12 to 18 months, and we're trying to grapple with, is there a way of making money from investing in China? But also we're trying to work out, what are the other export opportunities for Australia? So clearly our tourism exports have been hit very hard, and also education, and is there a long-term market that will return for those Australian companies?
Moving on to a little bit more macro now.
Okay.
Where do you think we are in the market cycle?
In terms of, are we at euphoria or are we at pessimism, I think we're more like, it's optimistic, right? Every CEO, corporate we talk to at the moment, they're saying, things are looking very optimistic for the Australian economy, and their company operating within that economy pretty much across the board. That's quite a broad trend. Euphoria, there's certain sectors, clearly unprofitable tech, the SPACs, the Bitcoins. We've seen a lot of speculative behaviour this year in the last sort of 6-12 months, and that's starting to unwind. With the threat of inflation and the threat of rising bond yields, we're actually seeing those, questions over the valuations of those unprofitable areas of the market.
What is one key idea or theme that you think investors have to get right to be successful over the coming decade?
Over the coming decade, wow, that's a big one. So clearly there's, the rising bond yield is going to have an impact, right, in terms of as we move back to normalcy, right? There has to be an impact on what the multiples and what happens to multiples. The question is, can earnings, earnings growth make up for that contraction in multiple? And we're already starting to see it in the market because we've got this positive earnings revision coming through, plus the multiples are contracting as those earnings are rising. So I do think it's really back to that inflation argument, rising interest rates, and that is going to be one area. that you have to really grapple with over the next 10 years. But China, like I was saying before, China is a big theme, and our export dependency on China, and also, the land of opportunity, like I said before, clearly there is an opportunity there. So we've just got to work out how we can make money out of it.
You've spoken a lot about China and healthcare and also export opportunities for Australia. Are there any other ideas or long-term investment ideas that you think that you're backing at the moment?
Long-term investment ideas. So when we invest, we try to look on a 3 to 5 year horizon. So if you're even looking on a further horizon, so we're still looking at those sort of left behind recovery, plays such as Sydney Airport, which I mentioned. Clearly it's been terribly impacted by what's gone on with the borders being closed. And we do think that tourism will return at some point, so we're prepared to wait that out with a company like Sydney Airport, which we see as a monopoly asset here in Sydney. It's an iconic asset, and those tourists will come back, and again, that company will thrive. So that's one company that we think, in terms of a long-term trend, will be a beneficiary.
And just finally, I'd love to know if you have one piece of advice for investors so that they can be successful.
Okay, well, I always say be patient, be diversified, but also, our big philosophy is the fact that share prices follow a growth in companies' earnings. Okay, so very focused on what are those earnings drivers for the companies. What is the earnings growth outlook for that company, and if you see any of those drivers wavering, or you see obviously a downgrade, then move on, find something else to invest in.
Thank you so much, Catherine. It's been an absolute pleasure to talk to you today.
You're welcome.